It's Wednesday, April 16th. Let's level up. Market had a pretty big pullback today after the NVDA news. They're not going to be able to sell their watered down chips in China without a special license. And the problem and fear is that that license could take up to 6 months to a year. And by then those chips will be obsolete. So obviously that took down the NASDAQ because NVIDIA will likely have to lower their earnings guidance, which they did. They took the write down of $5 billion, but they may miss quarterly expectations. And of course, analysts are going to be chasing their tail to take down their price targets. We've been seeing that across the board in the markets. Analysts tend to raise their price targets when markets are going higher, and they tend to lower them as they go lower. They're followers, not necessarily initiators. A lot of these downgrades would have been more helpful, obviously, in January and February when the markets were at highs, as opposed to now when they're already off 20%. As far as the VIX goes, we pulled back. We held the 20 MA, and I had told you I thought we'd hold the 28.32 to 29.57 level because that had been prior resistance and is now likely support. Bears will need to clear 34.77. That is the lower high from the last IV spike that we saw back last August. As far as upside goes, I think 45.61 could still be in play as long as we're above the 29.57 to 28.32 level. If we were to do the full Monty up to the downtrend tomorrow, you'd be talking about 51.52, but I don't necessarily think that's going to be the case. Now, here's the tricky thing. I do believe that the market has been under pressure lately because we're coming into earnings and there's an earnings buyback blackout, and then of course there was tax day. That's now alleviated. We also have a holiday shortened week, and I can tell you just from seeing traffic in New York City, a lot of people are away, kids are away, and so on and so forth, and I think people are waiting to get past that because you have Friday off and you have Netflix reporting after hours Thursday with the market closed, and you're not going to be able to react to it until Monday. So that could be a big catalyst for the Monday trade. Either we could see the next leg lower based on Netflix, or maybe some type of a relief rally. I think it would behoove Netflix to be lower into those numbers. The thing that worries me is that you have a lot of TV heads who were all talking up NVIDIA the other day, and that was one of the reasons I put on that short trade. I told you I bought the 90, 80, 75 put ratio, but they're also seemingly all very bullish on Netflix. I'm going to do a sentiment gauge tomorrow. I'll be very curious to see what that number's like. If it is anywhere in the mid to high 60s, it could be a short. We'll take that as it comes tomorrow, though. With regard to the ES, we weren't able to clear the 54.81 to 55.59.75 zone, which I told you would be resistance. We actually stalled at the 55.28.75 neckline where we broke down from. The pullback has not been that steep, but it has been somewhat steep. I thought we'd pull back to 52.62 half. I tweeted that out in real time that we were coming into the first line support to look to cover shorts and look for a bounce, and we actually got it. So what now? I think the bulls will need to clear 3 MAs here. The 50 MA 30-minute and both the 100 and 200 MA 30-minute, all of which could be resistance on the upside. If they can do that, I think they go higher. I don't see any significant lows today, so it is very possible there is another leg lower to 51.80 quarter to 51.46.75. And I've told you in prior videos that the all-time lows, or at least on this leg, were made in a pre-market overnight session, and that doesn't usually stand as a quote-unquote good low. It usually needs to happen RTH, so it wouldn't surprise to see those retested and maybe even traded through at some point. I do think that there will be a catalyst that's needed for that. It's possibly earnings or something geopolitical that we're not seeing, maybe the Iran strike. With regard to the Qs, we pulled back. We actually traded through the 18,268.75 level. The next big one on the downside would be 17,923 half, and then 17,578. On the upside, bulls will need to clear, of course, the 200 and 100 MA 30 minutes, wherever they are at the time, and the neckline level of 18,976.75. But I'm going to be a bit of a stickler. I need to see a clear 19,250. The 19,000 generally, though, is a good pass, don't pass line, and I do think you can continue to treat that as resistance until it is no longer. Now, it does seem to me that there's going to be a deal soon with Japan, likely with Italy, and I think some other countries like Vietnam. I don't know the exact timing on those, but I do think that those will be alleviations for the market. I think the market will take that as a net positive, particularly Japan. That's a biggie. I think England is also on the table. The EU, I think, is going to try to hold out, but eventually they'll cave, and I do expect there to be deals with Canada and Mexico soon, too. The word is, and it does seem to be being confirmed by some media outlets that China and the US are now in talks. China wants the US to kind of tamp down on the talk. You know, they're big about respect, but I do think that there will be a deal with China, but I don't think that that's going to happen right away. I think it's going to take a little while. But I do believe President Trump is meeting with President Xi in somewhere in one of the Arabic countries. I think it could be in Saudi Arabia, and that's going to be in June. So it wouldn't surprise me to see if there's a deal either based off of that meeting, or there will be expectation and hope, and it could be tradable. Maybe it's a sell the news opportunity if there is no deal. That's the one I'm sort of betting on. I think the trade deal is probably going to linger over the summer, but I do think they will eventually get to one. Now, one of the things I found as a bit of a positive today for the market was Cramer now saying that you don't need to just trade but own Apple and NVIDIA. He seems to be all dire. Short term, he'll probably be right, at least over the next few days, but I do look at that as more like capitulation as opposed to something that is first starting. Where was he at the highs, of course? With regard to NVIDIA, if you want to be long, today's low of day is 100.44. $100 is a good stop. Although I would like to see it over the high of day today from 106.79. I think it could fill the gap at that point to 112.20, and then we'd see. After that, I think there's a lot of resistance into the 119s. On the downside, if we do take out that 100.44, I think people are going to start you-know-whatting the bed once they see that 100 level crack, and they could retest down to those 90s and 86s. At that point, I'd likely cover the short trade and leave on the override playing for the bounce, but I don't discount the fact that we could see a 7 and maybe even a high 6 handle on NVIDIA on a really extreme scenario. I don't know what that would be, but of course the news always follows along the line of least resistance. I do like selling some out of the money premium on that, maybe on both sides. Still the premier name in the AI trade, and I think the best of the breed. As far as Apple goes, that seems to have gotten an exemption, but it does seem to be struggling here. I told you I thought if we stalled at 20 MAs, we'd see 10 MAs. That's exactly what happened. I know the media likes to make up a lot of noise because they have to fill up a lot of airtime, but we just go by charts. I mean, so I could just can't pass the BS. With regard to Apple, though, I do need to see it clear the 20 MA and hold, currently 207.06, and at the very least get its butt back up over the hard deck here of 199.62. Anything below there I think is sideways to lower with liquidation break potential. I would like Apple lower into earnings, though, the proverbial shake and bake, particularly if it's panicky. That would provide us with an opportunity to sell some way out of the money premium and even maybe play for a bounce with some type of a call spread, but we'll cross that bridge when we get to it. So you know my said levels, anything above bullish, anything below more bearish. Google's gotten a lot of downgrades too, but the price isn't really tanking that much. Bulls there really just need to get it over the 20 MA, and I think that could run over 157.03. A lot of people are pretty bearish on that. We are on the 10 MA here, so if you want to play right or right out, you could use low of day at 150.151 as a stop. If not, could come back and retest the channel low in the 144s. But generally, Google I'm starting to warm up to a little bit here because everyone seems to hate it. Meta got a big pullback. It continues to pull back. They have antitrust issues. There will be an opportunity to buy the dip. My guess is it will be when there is some bad news and the stock stops going down on the bad news. That's usually a good sign, or maybe they have a bad quarter, or maybe they guide down. I think the stock would still get hit on that, honestly, but if they were to do that and then the stock either opened down and closed higher, that could be an opportunity. I think if it keeps going lower, similarly with like the Apple setup, there could be a rebound play here because it is already down quite a bit. I would probably get more interested in this if we saw an obscene number with like a 384 handle, which was the old 2021 highs. I don't know that we're going to get that, but Meta has tended to move on earnings before. Now, the trade I like with Meta the most is, oddly enough, with Google. The first to report, they both usually go the same way, and the other one goes the opposite way on their own numbers. So keep that trade on your radar. Gold is starting to get that parabolic type of move. I told you it ends with these big up candles. I have some new proprietary levels here for upside targets if it just blows its whole mojo on the upside. 316.65, that's a new 2.618 fib extension. I'll show you how I calculated that in the weekend video. And then the 4.236 of the failed triple tap head and shoulders, it seems like a mile ago. If you look at the chart, it is a mile ago. We could be up to 327.53. I think now at this point with these big up candles, and we may get another one tomorrow, it's a good idea, first of all, to lock that in because traders tend to book gains ahead of weekends. But I think 303.80, which is above 300 here, is a nice hard stop. We could actually start rotating money back into the Bitcoin. I like that as long as we hold at least over the 10 MA, currently at 82,599, and better still over the 20 MA at 84,063. The upside target, I think we could see 88,214 and maybe even an overshoot to the 89,020. Eventually, I do think this will see 100,000 again. I just don't know the exact timing on that. There needs to be some type of a catalyst. Remember, Bitcoin initiated the market sell-off, so maybe it will be the first to turn and lead us out of it. Keep an eye on that. Like and follow for more.